Good morning, everyone. Welcome to the Chart of Accounts SubLedger Accounting Rules webinar. My name is Ernie DeSandro. Before we begin, I want to take you through a couple of some ground rules here. All callers have been placed on mute. If you do have a question, we ask that you please send it via the chat function, which we'll monitor throughout the session. The chat function for folks who are logging in for the first time on the Cisco WebEx Meeting Center up on the top ribbon. On the right-hand side, there's right next to participants is an icon for chat. Please click that icon. You will then see the window appear down below for chat functions where you can enter your chat questions or your messages there. Please take note right above that box where it does say send to, it defaults to Renee Hagwood, who happens to be our host. But please select everyone at the top of that list so that when you do type in your message, we can all see that. That would help save some time as we go through. We'll also have time for questions and answers at the end of the meeting. The presentation that you're seeing today will be posted on the controller's website by the end of the week. A recording of the webinar will be posted by the end of next week. And we do ask for folks who did register for this WebEx, you will be receiving an email to complete a survey that we would appreciate if you would complete that survey. For the people who are attending this webinar in a conference room setting with more than one participant, please send an email to Renee Hagwood. That's rh550@finance.rutgers.edu with the list of attendees, and we'll make sure we get everybody registered so you can get credit. And then you will also be receiving the survey via the mail. The surveys really do help us as we continue this process of doing webinars and continuing education series. And we do ask that that you do fill out those surveys so that we can have a more fruitful training session going forward. All right. Another bit of housekeeping today is the 17th, so this is our SubLedger Accounting Rules Overview session. It'll go till noon. We will be offering another version of this WebEx session on May 23rd from 1:30 to 3 p.m. Again, that session is on the controller's website. You can register, or if you have some colleagues who were unable to attend today that you think should attend, you can encourage them to register for the May 23rd session or listen to the webinar recording, which will be posted at the end of next week. Okay, my name is Ernie DeSandro. I'm one of your hosts today. I'm joined by Siglinda O'Connor, or Sig, as she is known from most of you out in the field. She'll be taking us through a lot of the details of the WebEx, of this webinar going forward. Okay. I do appreciate everybody taking the time to join this WebEx. What better topic to discuss on a gloomy Thursday morning than SubLedger accounting rules? But seriously, we're hoping that most people, learn about SLAs during this WebEx. There's no action required from you except to sit back and learn, and then continue to transact accordingly. Some of the material may be repetitive for some of you folks, but hopefully you can learn something today, or this can help clear up some of the questions you may have had in the past. So we're going to go through our agenda, which includes just a quick review of the chart of accounts. We did have other sessions for valid UDO strings, chart of accounts, and chart strings, et cetera, that you can attend on the controller's website. We'll go through some project-specific terminology, and then we'll get into the details of the SubLedger accounting rules, the grant fund type rule, and then some items that we are restricting, some of the segments that we are restricting in PeopleSoft and RU Marketplace. Okay, so as far as the chart of accounts and the background information, for those folks who did attend the open forums or previous WebExes, these slides should look a little bit familiar to you. But we wanted to continue to put this out here to reinforce what our goals are, to improve how we support the operations by making the chart of accounts simpler to use, ensuring the data are accurate and easily reportable across the university, and making certain that the project ledger interacts seamlessly with the general ledger. For a little additional background, the chart was developed with maximum flexibility to provide the university the opportunity to report as each unit saw fit. Unfortunately, as a university, we could not handle that flexibility, and it allowed users to enter any chart strings, purposely or unintentionally, which led to the creation of thousands of invalid chart string combinations. Currently, we're not following best practices, and that's due to a number of reasons, including lack of documentation on standard transactions, the inconsistent use of the chart, and the lack of clarity on how the university should be using the project SubLedger. We're hoping to clear up some of that in this process. For some of our dates to remember, on May 23rd, that will be the last date to correct employee charging instructions in PeopleSoft. That will also be the last date to correct UDO combinations for purchase orders in RU Marketplace. And then on May 31st, the SubLedger accounting rules and the grant fund type rule that we're going to talk about today will go into effect. Between now and June 30th, we will be monitoring and testing all of our cross-validation rules and SubLedger accounting rules. We have made monitoring reports or exception reporting available to the user community, and we will start to identify the chart string combinations in any violation. The idea here is that, by July 1st, all systems will be prevented from using invalid UDOs and invalid full chart string combinations. So between now and the end of June 30th, we will be monitoring and trying to get people to manage and make changes to those invalid combinations. So all users, we recommend that you start using valid full chart string combinations now so that you can get accustomed to it before July 1st. And as a reminder, we're going to point out all of this information you can find on the University Controller's website under the Chart of Accounts initiative for Chart of Accounts resources. You will see these boxes that are highlighted in green. When you click on those boxes, you will see the next slide, which will have a link to all of the resources, whether it's the overview of the Chart of Accounts, the actual valid chart segment value presentations, the Chart of Accounts videos, and the previous webinar recordings are all available on this site. Okay. Again, for more background, we're going to go through the Chart of Accounts structure listing there, the segments. The Chart of Accounts is a multidimensional structure. It has multiple segments in it. The first segment is the unit segment, which is the highest level of reporting and represents schools, institutions, centers, and then also central. The division is used to group organizations. The organization segment is a business area with dedicated people and space. Oftentimes we combine the unit and division and organization to really define what an organization is. We sometimes refer to that as the UDO. All right, the location segment is the area for which you are providing the service or could not be a physical. It could or could not be a physical geographic location of the people providing the service. The fund type identifies the funding source used to acquire goods and services, typically unrestricted, restricted, endowment, etc. The business line identifies the specific line of business or functional expense category. We do use this for external reporting. There are about 10 functional expense categories, including instruction, research, healthcare, public service, etc. The account segment identifies the nature of the transaction, such as expense or revenue, otherwise known as the natural account. And the activity segment identifies the total activity of high-level, interdisciplinary, or strategic initiatives that span across multiple units. The intra-unit segment is one that is system-generated and really has no user input on that. And then we have not used the future segment at this time, but we do reserve the right in the future to utilize that segment. These next few slides actually show the narrative that I just talked about for your reference. Okay. Under projects review, we're going to go over a few key terms just to level set everyone. A project is a collection of related financial activities for one or multiple business lines for a common objective and or mission. Projects are either sponsored or non-sponsored. Tasks are used to define financial activities in more detail on non-sponsored projects. Use tasks to organize work into smaller, more easily manageable components. They're meaningful groups of activities that span expenditure categories to define a division's business objective. A sponsor project is a project that receives funding from an agency or an award from a sponsor for research or some other specific purpose. Cost share and other program income projects are managed by GCA or grant and contract accounting, and are also considered sponsored projects. A non-sponsored project is a project that is not award-based. It can receive funding through internal and external sources, and they can be restricted or unrestricted. A contract is an Oracle field that is required to record revenue on any type of non-sponsored project. The project setup is referred to as the accounting segment set up on the project, such as the UDO or the location, business line, fund type, and activity on the task setup. The revenue account is set up on the project setup for sponsored projects only. And then view accounting is a snapshot of the project accounting that will roll up to the general ledger for all revenue and cost transactions. And again, we're providing this detail for you for reference in the future. Okay, let's define our sponsored projects overview. Sponsored projects have types. There are 3 different types: our grants, our cost share, and other program income. Grant project types start with the number 8. They are funds received from an agency or an award from a sponsor for research or other specific purpose. Cost share projects start with a 9-0. The portion of the total project cost related to a sponsored project that is not provided by the sponsor. It can be voluntarily committed or mandatory. Other program income projects start with a 9-8. They are income earned by a grant recipient from activities which are supported by the direct costs of an award. Non-sponsored project types. A non-sponsored project is a project that is not award-based. It can receive funding through internal or external sources, and as we said before, they can be restricted or unrestricted. There are 4 different types of non-sponsored projects: designated, restricted gifts, endowments, or plant capital non-sponsored projects. Designated project types start with a 2-0. They are internally funded from unrestricted funds. Restricted gifts start with a 5. They are funds that are received from donors or other third parties that are restricted by those parties for a specific department or operating purpose. Endowments start with the number 6. They are funds received from donors or held by the university in perpetuity or for a specific term. And then plant and capital project types start with the 7X. Okay, so before we get into some of the fields that are available in the project SubLedger, I want to take a pause there and look and see if we have any questions coming in on our chat. A lot of information here for background purposes, again, for your reference to go back to, but all I'm doing is setting the stage for the details that Sig's going to walk us through in a couple minutes. Okay, so far so good. Okay, so within the chart of accounts, we have project fields. All project transactions are recorded using the following segments. There's the project segment, the project number to which the cost or revenue is booked. There's a task, which is the task number on the project for which the cost or revenue is booked. Sponsored projects have only one task, but non-sponsored projects can have one or many tasks. The owning organization is the organization based on the project setup that occurs in the expense or revenue. This is commonly the UD&O, the unit, division, and organization. The expenditure organization is the organization field used on all project transactions and allows you to override the owning organization value. The location is the area of service. This will equal what's in the general ledger segment, as does the fund type, the business line, and the activity are all mirroring what's in the general ledger segments. The sponsored revenue account is the natural account used to record revenue on sponsored grant projects starting with an 8. It does also correlate to the general ledger segments. And then the expenditure type is the natural account or type of expense incurred. It is the same as the general ledger account segment. Okay, now that we got some of those terms and fields out of the way, let's talk through some of the changes in the SubLedger accounting rules. So, under our current project accounting, SubLedger accounting rules dictate how transactions in the SubLedger or satellite systems are accounted for in the general ledger. For revenue and costs, we utilize the project or task setup, such as the UDO from the project and the location we utilize the project or task setup, such as the UDO from the project, and the location, fund type, and business line from the task to derive the accounting for the general ledger. Oracle subledgers include project costing, project revenue, expense management, payables, and procurement. Satellite systems include, but are not limited to, PeopleSoft, RU Marketplace, student accounting systems, and our financial aid management systems. This next slide will illustrate basically a graphic of our satellite systems and Oracle subsystems. Again, this is not all-inclusive, but this is a demonstration for your purposes. On the right-hand side, we have highlighted some of our satellite systems, the financial aid management system, PeopleSoft for payroll entries, student accounting for tuition remission, and RU Marketplace. The areas in red are the subledgers that are within the Oracle financial management system: project revenue, project costing, expense, payables, and procurement. And basically, subledger accounting rules dictate how the transactions flow from all of these systems into the general ledger, the blue box there above. Currently, there are approximately 50 subledger accounting rules. We are going to go through some of the changes now. Okay? So our current project accounting dictates that sponsored revenue transactions that are system generated will always follow the project setup data. That's the UDO, project owning organization, location, fund type, business line, account, and activity. However, a non-sponsored revenue transaction will follow the segments that were entered by the user in the general ledger journal. Cost transactions for both sponsored and non-sponsored projects currently follow the chart string entered by the user. So you can see this has caused the accounting of the project revenue and costs not to be aligned in the general ledger. If someone entered an incorrect or a different chart string for the cost than were in the revenue project setup, we currently have a mismatch or misalignment in the general ledger, which caused difficulty in reconciling the project subledger to the general ledger. So SLA changes or subledger accounting changes are needed so that the costs are best matched or are aligned with the revenue in the general ledger system. We're going to go over 3 new or modified SLA rules in this presentation. We have sponsored or non-sponsored costs. We're going to be talking through facilities and administrative or F&A indirect cost recoveries, and accounts payable, freight, and miscellaneous lines. These changes are going to go into effect in Oracle on Thursday, May 31st. There is no change in the subledger accounting for sponsored and non-sponsored revenue. Okay. To take us through, before we begin here, so far I've gone through a bunch of background information and setup. Again, I'll try to fill some time here and look for some questions coming through on the chat. And we will be monitoring this, and we'll make sure that we take breaks periodically to read off the questions that are coming in for chat. Okay, enough of the background fluff, Sig.
Let's go to the
Let's
real
take
news.
us into the details, yes.
Good morning, I'm Sig Linde, also known as Sig. So I will give you the right of SLAs. First, we're going to start with sponsored project revenue. For the sponsored project revenue for grants, which are starting with an 8, we have always used the unit, division, organization, which is the project owning organization, and revenue account from the project setup. The location, fund type, and business line were always derived from the task setup. So nothing has really changed with the SLA rules for sponsored revenue. However, we have, through our data gathering, we have aligned for the project and task setup on the project master data, the fund type and business line and revenue account to reflect the type of sponsor, such as federal, state, corporate, municipal, private, etc. And you'll see an example for a federal project where you see the fund type is 310, which states federal grant and contracts. Business line is 3100, which is organized research, and the revenue account is 43,000, and it's grants, federal government. You can find this data for the most recent project setup data in the project master data file, or you can run the RUPJ 013 project COA segment listing report. The master data file can be found on the controller's website, and the report you would have to run out of Oracle.
Okay, Sig, we do have a question coming in from the chat room here. When we have a new award and need to input account info in RABs, there is no guidance on what fund type and business line to input. If we choose the wrong types, will they be corrected?
Yes. Yes, they're going to be reviewed in pre-award and in post-award, and they will be corrected accordingly.
And we continue to work with GCA to make sure that through our communications that we're providing better guidance on fund types and business lines to use. We have another question come up.
Okay.
Did they up the RU PJ13 COA segment listing to agree with the master data file? The information did not match as of last week. So the RU PJ13 file has been uploaded? Has it been loaded?
Not yet. We're uploading it over the next day. It should be done by the end of this week.
Okay. So by the end of this week, we will have the RUPJ13 COA segment listing report updated for the current master data file. Okay, thank you very much for those questions. We'll continue on, Sig.
Okay, so on the next page, you will just see a visual regarding on how it's derived for the sponsored project revenue. So as we said before, the unit division, organization, and account are coming from the project setup, and the location, fund type, and business line are coming from the task setup. Let's go on to sponsored project number 2, cost share and other program income. For the projects that start with a 90, which are the cost share, and the 98, which is other program income, revenue is recorded via the general ledger journal and follows the same procedure as non-sponsored projects discussed in the next slide. There is no change in the SLA accounting for cost share and other program income revenue.
Okay, we do have another question. If there is revenue missing from a project, a non-sponsored project, who do we contact to discuss?
You would contact the controller's office, and there is a list of staff members that are responsible for restricted gifts or endowments or designated, and those would be the people that you would have to contact.
And they are going to be provided at the end of this presentation. You'll have the list of who to contact. Okay. All right.
So on to non-sponsored project revenue. The non-sponsored project revenue is recorded via a manual journal entry or spreadsheet general ledger journal entry. It is accounted for the general ledger when approved. This includes, of course, cost share and other program income. The following general ledger journal categories are the only categories that will update the project revenue subledger. RU cash receipts, RU PGM revenue transfer, RU PGM revenue adjustment, and RU PGM revenue accrual. Still, there is no change with the SLA rules for the non-sponsored revenue. Here is some instructional value. To ensure that the general ledger and project subledger are aligned for the revenue accounting, the user should do the following. Run the RUPJ 013 project COA segment listing report by project to obtain the general ledger string, the task number, and the contract number for their non-sponsored project. Create a manual or spreadsheet journal entry using the exact string for each project from the above report. Then enter the project, task, and contract number on the journal entry in the additional information section of the journal. This information will transfer the dollars into the project's revenue subledger. This is how normally a journal entry will look for all non-sponsored and cost share and other program income. It's a screenshot with the drop-down box showing the items filled in.
Okay.
Okay.
Where does BR3s and tech project accounts fit in all of this?
So the BR3s are currently in transition from sponsored to non-sponsored.
Yeah, so BR3s typically belong in the non-sponsored section. In conversion, some of those BR3 projects were converted incorrectly into the sponsored project area, and the controller's office is working with GCA to get those projects transferred from sponsored into the non-sponsored section. That's where they belong. From a tech project, I don't really understand.
Yeah, I'm not quite sure. Could you elaborate what you mean by tech project?
Will the numbers change? Yes. When the BR3s move from sponsored to non-sponsored, the numbers will change.
Depending what they are, whether they are a gift or if they're an endowment or if they're a designated.
Yep.
So they will follow the numbering sequence.
The other big item here that I should talk about, just as it relates to the BR3 specifically, is that part of the challenge of moving those projects from sponsored to the non-sponsored is that we're having difficulty finding the documentation to support what that original purpose of that project was. And so this is accounted for in project review for those items that converted incorrectly specifically. And so you should be hearing from that team to go through those particular projects and to find that documentation. Okay, we'll continue to wait for the tech project account clarification. But we did get another question for IPO revenue. We have been using Oracle Project Non-Labor Upload Spreadsheet to transfer the revenue from GL to project. Is this the correct method?
Yes, it is, because it is a cost recovery rather than a pure revenue.
Okay. All righty.
Okay.
We'll continue to take breaks, but why don't we move on, Sig?
Okay. So just to elaborate a little bit more and reinforce for non-sponsored project revenue, if the user enters a general ledger string on the journal, which differs from the accounting on the project setup, the view accounting screen in the project revenue subledger will differ from the accounting in the general ledger. In this case, only the account segment will be the same in both the general ledger and project revenue subledger. So basically what we're saying is if you follow the string, you will match your GL and you will match your project subledger. So by entering a general ledger string on a revenue journal entry that does not match the project setup, your project accounting and the general ledger accounting will be inconsistent, and you may have issues reconciling. Any questions before we move on to sponsored project costing? Oh yes, and there is no change with the SLA rules for non-sponsored revenue.
Okay. What are the steps involved in reconciling the non-sponsored projects to the general ledger? That's a great question. I mean, maybe we should have a WebEx, a webinar on that altogether. But to answer your question more directly, from the GL reports that are out there, you can run an account analysis that would determine what of those transactions came from the project subledger, in which case you can then run various other reports. And there's a job aid out on the controller's website to explain how to do this. But duly noted, I'm going to ask the team here that we will provide a WebEx just for this particular case where we're going to be reconciling from non-sponsored projects to the GL and sponsored. Okay.
Yes, gifts and endowments are considered non-sponsored projects.
Yeah, just to clarify, gifts and endowments will be considered non-sponsored. That is correct.
So let's move on to sponsored project costs.
So up until now, Sig, nothing's changed.
Nothing has changed
on the SLA.
We just wanted to give you a background how everything works and how you've been seeing your revenue so far.
Okay.
So for sponsored project costs, there is a change in the SLA accounting. It was time. The UDO, location, and business line are no longer derived from user entry. Going forward, unit, division, organization will be the project owning organization and will be derived from the project setup. Location, fund type, and business line will be derived from the task setup regardless of user entry. The account will be derived from user entry as we do currently. And once again, on the controller's website, you can view the most recent project setup data in the project master data file, or you can run the RUPJ 013 project COA segment listing reports at the end of the week when everything will be loaded. And the next page is just a visual, just telling you where the information is coming from. Everything in red comes from the project. Everything in green is user enterable.
Not much there in green, see?
Yes, that's good though. Let's work. So just to reiterate, is all costs for sponsored projects that includes grants, cost shares, and other program income will follow the accounting of the project task setup, with the exception of the account segment. The SLA will derive general ledger accounting from the project task setup data, which will override what is entered by the users for payroll, employee charging instruction and timesheets, expense reports, RU marketplace, project adjustment, and all other interface transactions. This SLA rule ensures all project costs align with the project revenue in the general ledger for sponsored projects.
Okay, we have a question.
Why are we only implementing the SLA for sponsored projects and not for all projects, both sponsored and non-sponsored? That is the next section. We broke it up into sections because the rules are slightly different.
So hang in there.
There is more to come, only good stuff. So the next section is non-sponsored project costs. For projects that start with a 20, our designated, a 5, which are the restricted gifts, 6 for task 601 operating, which are the endowments, and 7s, which are planned capital, there is a change in the SLA rule for non-sponsored project costs. The UDO will no longer be derived based on user entry, but from the project setup. So just to outline it, unit division organization is now the project owning organization set up on the project, and the fund type is set up on the task. So the fund type has always been hard-coded from the task. The location, business line, and account will be derived from user entry. And again, you can review the most recent project master data file on the controller's website, or you can run the RUPG 013 report. And the next slide gives you the idea. Again, in red is what is coming off the project task, and in green is what is user enterable.
Okay. And we have a question here. How will this work when you have multiple PIs and are in different UDOs and their own project budgets, but the same award number?
So normally, if you have different PIs on the same award, wouldn't you also have several projects set up under the award? That's how I have seen it.
Yeah. And so you have multiple.
Yeah, and each PI would be in these projects and assigned a separate project and task number. Now, for additional information, you can always contact GCA at orad.rutgers.edu.
Okay.
Okay.
Yeah, I guess I don't see any other questions. We can move on. So far we've talked about 2 changes to the SLAs on sponsored and non-sponsored costs.
Yes. So the next one is facilities administrative costs, or F&A indirect cost recovery. So facilities and administrative, or F&A indirect costs, are expenses charged to support research and other sponsored programs. F&A only applies to sponsored projects starting with an 8. The F&A rate is a negotiated rate to cover the overhead costs incurred by the university on grants. Currently, a monthly journal is created to return the overhead cost recovery as revenue using the designated UDO, location, business line of the deans, departments, institutions, directors, and using a constant account of 41700. The deans, departments, institution, directors decide how to redistribute this revenue to their organizations.
Okay, and that's the current methodology. Before we go on to what we're doing, let me get to this question. Does this mean, for example, that in procurement, when you enter a project number, the other fields will autofill? Unfortunately, it will not autofill, although we are always working to make this process with procurement a little easier for the end user. Unfortunately, you still do have to fill out all the other fields. We ask that you use the same fields when doing so, but we're not there yet on the autofill. And this also applies to charging instructions in PeopleSoft.
Yes, and in the expense system, it's basically in every system that before required you to fill in certain items, you still have to fill them in.
Okay, so back to our F&A indirect cost recovery. This is the current methodology.
And as of Thursday, May 31st, your F&A will now be automatically booked in real time to a specific general ledger string assigned to each individual sponsored project, which eliminates the need for a monthly journal entry. So basically the expense gets incurred, gets booked to your project, the accounting happens, and it derives the F&A based on the rate, and you will receive the revenue at that time. The pre-award office will collect the information for F&A on the new projects that will be set up. But the redistribution of the revenue will continue to be handled by the deans, departments, institutions, directors for their organizations.
Yeah, and so that's important clarification there. While the revenue does happen at the time of the expense, the revenue is accrued, the redistribution of the revenue will continue to be handled by the dean or department or institution. So that will not be automated just yet, or it will be up to the individual dean to determine that.
Mm-hmm. So do we have any questions on F&A?
Not yet, but there's always a lag here. So we'll move on to the next one.
Which is freight and miscellaneous lines. So if freight or miscellaneous charges are not recorded as a separate line item on the requisition and are later added on the invoice by the supplier, the accounting for the invoice is as follows. In the general ledger, the accounting will be based on the UDO, location, fund type, and business line as entered on the requisition with the exception of the account. In projects, the accounting will be derived from the project setup data for UDO, location, fund type, and business line with the exception of the account. The account for both general ledger and projects are 69220 for freight and 69300 for miscellaneous lines. If freight or miscellaneous lines are recorded as a separate line item on the requisition, the accounting for the invoice will use the account specified by the user for both general ledger and project. Unfortunately, the rule is currently not going the way we would like to see it, and we are working with Oracle to rectify this before we can implement the change. We have an F&A or two F&A questions.
Yep. Are you saying each project will have a specific GL string to record the F&A so we can then track the F&A on a project? I believe that's the case today.
Yes, it is. Yeah, you can track it today based on your project, because just based on the natural account that you're using, but this will basically tell you which combination it is going to.
Okay. When F&A rates change, will each project be automatically retroactively charged if open at that time?
That is more or less a GCA question, I would think. Yeah. But if it is, it will automatically go back to the GL.
Yeah, there's no technical limitation.
Right.
It's just it's a more of a functional decision.
And F&A charge on freight and miscellaneous, that depends what your contract allows on a sponsored project.
And then charge back to the GL, of course. Yes, we will manage that.
Yes.
Okay. We did just get a confirmation that the rate will change automatically for each project, that when the rates change, we will go back and change that.
Yes, there will be a recalculation of F&A cost.
Okay. Question, what report can we run to show all of the F&A for the unit which have been returned? Will it also show the name of the respective PI? Currently, I think there's the journal entry that is distributed out that will show you how much F&A is getting returned. That is a journal entry, and it doesn't really have the name of the respective PI where it came from. So it does not. Again, theoretically, the F&A that is assigned, there may be a different way to get the F&A by PI by going to the source SubLedger, in the revenue and cost side of it, which we can follow up with on that.
Yeah, because the PI is not maintained on the GL, only on the project, so you would have to run it off the project then.
We'll provide some guidance on which reports to run to get that information. The detail is only sent to the receiver of the funds. Yeah, so in terms of my answer around the journal entry is only sent to the receiver of the funds.
That is correct at this point.
Yep. Which is exactly what the question was. Okay.
So moving on to improvements for more consistent accounting. We have two items that we need to address. We have the grant fund type rule, which ensures that project transactions are not processed directly in the general ledger, and the restricted segments in PeopleSoft and RU Marketplace. We will restrict certain segment values that should not be used on payroll or purchasing transactions. We're starting off with the grant fund type rule, which will be effective as of May 31st, 2018. This fund type rule prevents users from recording activity to sponsored project fund types in the general ledger through manual or spreadsheet journals. General ledger journals with sponsored project-only fund types on any lines will be automatically rejected. This fund type rule prevents project transactions from being booked only to the general ledger and therefore causing a mismatch if you're reconciling. And the next page has 14 fund types that are directly related to grant funds only.
I know this is one of the big areas that was, hampering the ability to reconcile from projects to the general ledger. People were putting entries directly into those fund types, so this should help a lot with that reconciliation process.
Yeah, you should be able to tie back your totals much easier. And the next section is restricted segments in PeopleSoft and RU Marketplace. This change is also effective as of May 31st, 2018. So we are restricting certain segments from being used in PeopleSoft and RU Marketplace on general ledger or project transactions. All project-only fund types will not be available for use in PeopleSoft or RU Marketplace on general ledger transactions. This includes all the sponsored fund types that you've seen before and also non-sponsored projects. Specific business lines such as cost pool or revenue only types will not be available for use in PeopleSoft or RU Marketplace. And specific accounts such as all revenue and many balance sheet accounts will not be available for use in RU Marketplace. In PeopleSoft, the account segment is derived based on payroll rules and is not user enterable. The next few slides list the fund types, business line, and accounts that will be restricted. So you have 14 sponsored fund types, which are the same as the slide before. You have 18 non-sponsored fund types.
And again, these slides will be available tomorrow on the controller's website. The slides will be made available so you have this for future reference.
Then we're going into the business lines, which is the next 2 pages. And again, let me These are all cost pools for the most part, with the exception of the first one, which is a revenue-only business line, the 0500. And they should not be used on any type of transactions from outside systems or external. And then the next page, 2 pages, will give you a range of accounts. Basically, on the first slide, you will see all the balance sheet accounts that should not be used. And the second slide is all the revenue plus the cost pool accounts and transfer accounts.
Again, so we're putting in, we're restricting the use of these accounts or other segments in PeopleSoft and RU Marketplace, just to kind of keep down on that traffic of the invalid chart string combinations.
Yes, and it will be cleaner and aligned much better.
So, okay, so while we went through a lot today in a short amount of time, we have plenty of time to go over questions and answers. But in summary, what we did today was go over the chart of accounts. We provided a review for the chart of accounts. We provided the project overview, which included terms used in the project subledger, the definition of satellite systems and subledger systems and SLAs. Then we went through the actual subledger accounting rules, some that did not change. We went through and reinforced how the rules are supposed to work, and some that did change around sponsored, non-sponsored project costs. We talked about grant fund types, where we're restricting the use of people putting entries directly into the general ledger. And then we went through some of the restricted segments that we are not allowing in PeopleSoft and RU Marketplace. And again, all of this will be available on the controller's website tomorrow. The recording of the webinar of this WebEx will be available next Friday as we wait for more questions to come in, and we do have one. So regarding the accounts that are not allowed to be used, I utilize liability accounts to book bulk payments for travel, UPS, etc. to a GL string and a liability account. How will I pay these in the future if they are restricted? Yes, Christine, you're in the accounts payable department. They will not be restricted for you. So that's the summary of where we're at in terms of who to contact from our for the subledger accounting rules. We have the Financial Management Help Desk, email and contact information, and then our wonderful folks in the Controller's Office, Maria Galvin, Shilpa Gupta, and Dennis Castro for F&A and direct cost recovery. Their beautiful pictures with the Rutgers football flags. Their contact information is there. We would definitely, as we take time on this slide, to remind you to please fill out the survey that is sent to you. We do read those surveys. It is shared amongst our team to make these webinars better in the future. They're so important for us that we really do appreciate the time. Also, if you have the registrations that for folks who have attended this webinar in groups, please send those emails to Renee Hagwood at rh550@finance.rutgers.edu to make sure you get registered and get credit. We are getting asked from the unit, from the Chancellor unit reps to provide the list of registrants so that they can keep track of who's attending these. Again, this is a continuous process. We are also have plenty more webinars that we're going to schedule going forward, and we look forward to that. So we have some great contact information that just got posted from Loretta. So on the project contact information, who to contact with designated projects that begin with a 2, for restricted projects that begin with a 5, and so on and so forth. We'll copy and paste that into a slide for the before we get it out on the controller's website. Thank you, Loretta. Will you be sending an email when reports are updated, such as the RUPGM 13? The answer to that question is yes. And again, we're trying to get that out by the end of the week. I just looked out the window. It's still raining out there, so unfortunately I didn't talk long enough for the sun to come out.
Aim for high noon the next time. Okay. So please feel free to ask anything. You know, anything related to projects while we're here, and we will gladly answer it.
Okay, what about updated CVR rules? I had a rule and looked at the rules, and it was dated as of 5/7, and I was told the rules needed to be updated. So
Hi, this is Sue Heleno. The rules were updated as of May 11th. We're waiting for them to get posted to the controller's website. So if you just keep looking, it should be there within the next day or two. And then just to give you information is that the rules are constantly being looked at and tested. And occasionally, well, it seems like weekly, there are suggestions on tweaking the rules. So we do have a couple of changes that we're requesting the change control board to look at, and then they would be posted on the controller's website with the date of 5/18/18 if they are approved. So the rules that you should be seeing on the controller's website are dated 5/11. And if you can't, if they're not there, just please email me at COA at finance.rutgers.edu, and we'll get you a copy.
okay. Since the other chart of account numbers will not be filled out when the requisition is prepared in the marketplace, can those fields be left blank or have zeros entered where the preparer has to enter the correct string? Otherwise, it will get an error message and will not be able to submit the requisition.
Just for good practice, you cannot leave them empty because I believe your marketplace will require you to fill them out. But for good practice, I would use the proper numbering, project UDO, location, and only sponsored, cost share, and other program income take everything off project tasks. For any non-sponsored, you will have to put in a location, a business line to make it work, because otherwise it will take it just off the task if you are putting something incorrect in, or if you're putting, and I believe it doesn't even come over to be validated if it has incorrect values.
Okay, we'll give it another minute or so. And we have another question coming in from the, okay. Who do I specifically contact regarding revenue missing from a non-sponsored project? That would be one of those folks up above.
Well, Loretta provided us with the contact information, and you would be contacting them. It's a couple of messages above. I think it's prior to the CVR rule update. Yeah, right here.
Right. So depending on what type of non-sponsored project, whether it begins with a 2 or 5, et cetera,
yes,
those would be the people that you would contact. And And if you're on the WebEx and you're looking at the chat, again, we will put this onto a slide before it gets posted on the controller's website. Okay. Is that a new question that I missed? Oh, thank you.
Okay.
Sorry. Will the project entries now autofill the debit fields based on the project, task, expenditure type, or do we still have to enter those fields? Also, if the department gives us information inconsistent with Report 13, whose info do we use, Report 13 or what the department gave us?
So there's two things. You're talking about the cost journal, correct? So two things. You only have to fill out the raw cost debit and credit column. No longer do you have to do the burden and burdened. The second thing is on the debit side, which is always the project, you would still have to give information. The project side, if it's a sponsored, will be completely overwritten, as are the rules as we discussed before. But on the credit side, you will have to give a valid account, a GL string. Otherwise, the journal entry will error out upon accounting.
And then also, if the department gives us information inconsistent with Report 13, whose info do we use?
Well, it depends. So if it's a sponsored project, Report 13 supersedes. If it's a non-sponsored, they could potentially give you a different location and a different business line.
And again, you know, we continue to try to make these kinds of improvements with the autofill, et cetera, but, you know, until we get there, these are just little baby steps we're making to get the information correctly aligned. Okay, another question. I understand that the rules are constantly changing, but when you are running the CVR reports and you get a rule error and look at the current CVR rule on the controller's report, you can't understand why you have an error based on the listing. If this happens, who do we contact?
Hi, Sue Heleno here again. Just email me at coa@finance.rutgers.edu, and either myself, Loretta Anderson, or Mindy Rubin will help you through the CVR violation.
Okay. Yeah, and again, we're working to make these align a lot faster, and so that you don't have these frustrations. We do appreciate your patience through this process. Next question. So in the future, we did not have to enter the debit and credit information 3 times on the project cost template?
No, you don't. You will only have to enter it once in the debit and credit column under raw cost. We will update the job aids that are currently on the Controller's Office website, and we will also send out a notification in addition to that.
I hear a loud yay.
Yeah.
Okay, we made one improvement.
Yeah. Sometimes it's the little things.
Does that start 5/31?
Actually, it's active now, that part.
All right. Well, we do appreciate everybody's time, although we have plenty of time left for questions. Next time I'll be prepared with a little more jokes to keep it going while we're waiting for people to type. Here's one. Will the template be updated?
Oh, the template will be the same. You just ignore anything to the right of raw cost, burden, debit, and credit.
It sounds like we probably need some sort of communication to that effect, just to clear that up for folks. Again, we will be doing this all over again on May 23rd at 1:30 to 3 p.m. in case you do have any colleagues that you think would benefit from attending, although we will be putting a recording out. It won't be till next Friday. And I believe somebody told me next Friday is the day before, you know, the Memorial Day weekend. So
All right, so you have, in case it's raining, you have a good book to listen to. And just to say thank you for listening in, and I hope we clarified some of the issues and helped you out in reconciling in how to look at your project, how it rolls into the general ledger, and any feedback, please feel free.
Yeah, and so the actual next session is May 23rd at 1:30. I'm sorry if I said the 24th earlier.
I didn't think you did.
Okay. And please fill out your surveys. They are pretty much, right? They're anonymous, aren't they?
Yeah.
By the time we get them, yeah, we certainly don't have any visibility, but we are. So far, I think in the first 2 weeks, we had a few hundred, about 400 attendees, and we only had about 100 survey responses. So 25% is not bad, but we would like to get that improvement. Okay.
No problem.
Okay, very good. And we do have Renee's email up there for further questions on the future session as well. Send her your attendees. She's our rock star who manages these webinars. And she does accept flowers, I think, and chocolates. Yeah, flowers and chocolates.
And cold hard cash.
Okay. Well, thank you again, everybody, for attending. I guess we'll wrap it up here.
Yes.
And then we will, again, post these by tomorrow. And I appreciate everybody's time. Thank you so much. Hope you found it useful, a good use of your time. And we look forward to the next webinar. Thank you.
Thank you.